Welcome to the deep dive.
All right, let's jump right in. We've been digging into a whole stack of sources, reports, analyses, and especially those latest numbers that just dropped on May 30th, 2025, all focusing on, well, one of the world's most watched economies, India. Specifically, how it performed in the fiscal year that just ended, FY25.
That's right. And think of this deep dive as our mission, really, to unpack what these figures are actually telling us. What do they really mean for India, for its people, and frankly, its place in what's a pretty shaky global landscape right now? We're trying to cut through the jargon, get to the core insights.
Yeah, exactly. And the big headline, the sort of overarching theme we keep seeing is this remarkable steadiness. I mean, despite all of the global turbulence, you've got trade tensions, geopolitical stuff, you name it. India economy seems to be, well, holding its course. So the question is, how is it managing that? What does this steady sailing actually look like up close? And where might it be headed next? So let's pull back the curtain then. The headline numbers. What did the final count for real GDP growth in FY25 actually come out as? Okay, so the big number everyone was watching, it landed exactly as expected, 6.5% real GDP growth for the full fiscal year 25. So no huge surprise, but honestly, in this global climate, predictability almost feels like a superpower.
Right. Predictability is good.
And actually, if you zoom into that last quarter, Q4, so January to March 2025, the growth rate was even a bit stronger. It came in at 7.4%.
Okay, 6.5% for the year, 7.4% in the final stretch. And just to give us a sense of the sheer scale here, what's the total size of the economy in real terms?
Yeah, good question. The real GDP for FY25 hit 187.95 lakh crore. Now, translating that into dollars, just for context, that's roughly $2.2 trillion USD. Gives you a sense of the magnitude. But remember, that's the real figure.
Real versus nominal. Okay, that's always a key distinction. It can sometimes trip people up. How do you break that down simply for us?
Well, the easiest way I think about it is like your income, maybe. Nominal GDP is the total value of everything produced at today's market prices. It's the raw rupee amount, basically.
Got it.
Real GDP, though, that adjusts for inflation, it tells you the actual increase in the volume of goods or services produced once you strip out the effect of rising prices. It's the growth that shows more stuff is being made, more activity, not just that things cost more.
So it's the real increase in output.
Exactly. And just for the record, India's nominal GDP, the one including inflation that actually hit 33.10 lakh crore, about $3.8 trillion USD, it grew faster at 9.9% because it's got that price increase component baked in.
Okay, that makes sense. Real GDP is the growth in the actual size of the pie. Nominal includes the inflation froth. And we also look at GVA, right? Gross value added. That's another measure.
Exactly. GVA looks at the contribution from different sectors like agriculture, manufacturing, services to the economy's output. And for FY25, the GVA growth rate was really close to GDP. It came in at 6.4%.
Okay.
So both key measures are painting a pretty similar picture,
Yeah.
steady expansion.
So 6.5% GDP, 6.4% GVA. It's consistent. It's predictable. It feels less like a rocket ship launch and more like, I don't know, the analogy that keeps coming to mind is a dependable ship. Just sailing steadily through some pretty choppy global waters. Maybe not grabbing headlines with speed records, but reliably making progress.
That steadiness is the story, I think. In a world where a lot of economies are really struggling, just trying to stay afloat, India actually hitting its predicted stride. That signals a pretty significant level of resilience. There's real internal momentum there.
Resilience, absolutely. But like any complex system, not all parts move at the same speed, right? So if we sort of slice open this economic pie, or maybe sticking with food, think of it like an economic dosa. Some parts are really crispy, others are a bit softer. What were the key drivers, the crunchy bits?
Okay, yeah, let's look inside. Starting with what really shown. Agriculture, maybe surprisingly for some, made a really strong comeback. After a weaker previous year, it grew by 3.8% in FY25. And it actually accelerated to a very robust 5% in that final quarter.
5% in Q4.
Yeah.
Wow.
Yeah. And this is so vital, because rural incomes, food supply, it's all fundamental. Farmers are absolutely key players in this picture.
And exports. I heard those looked incredibly strong this year.
Oh, record-breaking. Absolutely. India hit a record $825 billion in total exports.
$825 billion.
Yeah, showing solid 6.01% growth. It's a real testament, I think, to India's growing capability on the global stage. You saw sectors like engineering goods, petroleum products, electronics really leading the charge there.
Okay. And consumption. That's often called the main engine of the Indian economy. Was that firing?
It certainly seemed to be. Private consumption stayed robust, grew at a healthy 7.2%. And this is crucial because it's the biggest piece of the GDP pie, over 56%.
Right, the biggest chunk.
And what's particularly interesting is the role of rural demand. That better performance in agriculture we mentioned, combined with ongoing government welfare programs, seems to be putting more money into people's hands outside the big cities. It's really fueling spending there.
That's a key dynamic. And the services sector, the absolute giant in the Indian economy.
Services continued its strong growth path, expanding by 7.2% overall. Now, that's slightly lower than the previous year, but it's still a major driver. And interestingly, we saw particularly vigorous growth in areas like public administration and defense that grew by 8.9%.
Okay, so strong list there.
Yeah.
Agriculture bouncing back, exports hitting records, consumption holding firm, services powering along. Those are the parts really pulling hard. What about the softer spots then? The areas that maybe weren't quite keeping pace?
Manufacturing is definitely one area that needs, well, significant attention. Its growth rate was really minimal this year, almost barely registering compared to some other sectors.
Minimal. Like how low?
We're talking very low single digits, barely whispering, you could say. And this is a challenge because manufacturing is just so critical for creating jobs on a large scale and for India to really compete globally. Getting that engine firing properly is key.
Right, for jobs especially, and government spending. Sometimes that acts as a major lever for growth. What happened there?
We saw a pretty noticeable slowdown here, actually. Overall, government spending grew by only 2.3% this year.
Only 2.3%. That's quite a drop.
It is. It's a sharp deceleration from 8.1% the year before. And this meant government spending contributed less to overall GDP growth than it did previously.
Mm.
Now, to be fair, we know central government capital expenditure that's spending specifically on long-term assets like roads, railways, ports, core infrastructure that continue to see strong growth.
Okay, so infrastructure spending was up.
Central government infrastructure spending, yes, but that increase wasn't enough to fully offset the slowdown in other areas of government expenditure overall.
Got it. So infra spending up, but overall government contributions softened. What about investment more broadly? Gross fixed capital formation. We hear about businesses announcing big plans.
Yeah, there certainly are ambitious plans out there, lots of announcements, especially for the private sector in that last quarter. However, if you look at the whole year, the overall investment growth rate, it did slow down, came in at 7.1% in FY25.
Still positive, but slower.
Yeah, exactly. Slower compared to a much stronger 10.1% the year before. So while 7.1% is still decent growth, that deceleration suggests maybe a degree of caution. Perhaps investors are waiting to see how global conditions shake out before fully committing capital at the pace they were previously.
Okay, so a picture emerges. Stability driven by consumption, agriculture, exports. But manufacturing is lagging, and there's a slowdown in government spending and the overall pace of investment. And you mentioned earlier that hitting expectations, this no surprises outcome, is actually pretty significant. Why is that predictability so important right now?
Well, because the world is so unpredictable. When you look at all the volatility hitting supply chains, energy prices, interest rates globally,
Yeah.
hitting your forecast suggests a fundamental resilience. It means the underlying domestic activity is robust enough to withstand a lot of those external shocks. I like the analogy of a skilled rickshaw driver weaving through chaotic city traffic.
Huh.
You know, it's messy out there, lots of sudden stops and starts from everyone else, but somehow they navigate it skillfully and get you reliably to your destination. That's kind of how India's performance feels right now.
Navigating that does sound challenging, and it seems forecasters are still watching those external challenges very closely, because we did see the forecast for the next fiscal year, FY26, get trimmed slightly, didn't it? From 6.5% down to 6.2%?
Yeah, that's right.
What does that little adjustment tell us?
I think it's mainly a signal of prudence. It tells us that those global headwinds, they aren't expected to just vanish overnight. Things like potential trade disruptions, maybe proposed tariffs from major economies like the U.S., and just ongoing geopolitical jitters. Those are real risks. They could impact export demand or mess with supply chains.
Right.
So forecasters are essentially baking those possibilities into their outlooks, leading to that slightly more cautious prediction for the coming year. It's sensible caution.
Okay, let's widen the lens now. Let's think about what these numbers mean for India's place on the world stage. This steady growth story, it's part of a much bigger narrative, isn't it? A story of really rapid economic ascent.
Oh, absolutely. The sheer speed at which India's economy has expanded over the past decade or so is, frankly, remarkable. We've seen the GDP essentially double, right, from around $2 trillion back in, say, 2014 to that $4.3 trillion nominal figure we touched on for FY25.
Doubling in a decade.
Yeah, that kind of scaling is significant on a global level, no question.
And that speed is leading to some pretty major predictions about India's future global ranking, isn't it?
Indeed. You're seeing projections like from the IMF suggesting India could overtake Japan by FY26. That would make it the fourth largest economy globally.
Overtaking Japan soon.
And then firms like Morgan Stanley are looking even further ahead, projecting India might surpass Germany by 2027. That would put it in the third spot, right behind the US and China.
Wow. Third largest by 2027.
These are ambitious projections, obviously, but they're based on the kind of momentum we're discussing.
But it's always crucial, isn't it, to ground those big picture rankings in the reality for individuals. The per capita GDP figure, that tells a very different and maybe more challenging story.
Precisely. That's the critical context. While the overall size and the growth rate are impressive, India's per capita GDP is still relatively low. It's under $3,000 per person.
Under $3,000.
Yeah. And achieving true middle-income status, which is often pegged around, say, $10,000 per person, that requires sustained growth over many, many years. Growth that really benefits the vast majority of the population. The overall ranking is one thing, but improving living standards across the board. That's the ultimate goal.
Absolutely. Going back to exports for just a second, you highlighted their record performance. But there's a bit of a nuance there, isn't there, when we look at goods versus services exports in the global context?
There is, yeah. India has become this absolute powerhouse in services exports, IT, business process, outsourcing, etc. And that provides a fantastic buffer, a great income stream for the economy.
Definitely.
However, when you look specifically at global goods, trade, physical products, India's share is still relatively small. It's only about 2% of the world's total goods exports.
Only 2%, even though India is like 4% of global GDP.
Exactly. So there's a gap there, and there's significant potential. Some analysis suggests that just increasing India's share of global goods exports from 2% to 3%, that alone could add a full percentage point to India's annual GDP growth.
A full percentage point. That's huge.
It has a massive multiplier effect if they can capture more of that global manufacturing and trade pie.
Okay, and that connects directly, I think, to the most fundamental question for so many people. What does all this growth actually mean for jobs, for livelihoods, bringing these big numbers back down to the human level?
This is perhaps the most critical challenge. The economy is growing, that's clear. But translating that growth into enough widespread, high-quality jobs, that's the real hurdle. Estimates vary, but generally, the consensus is India needs to create something like 8 million non-farm jobs every single year between now and 2030.
8 million every year.
8 million new jobs a year, just to absorb the young people entering the workforce and meet the aspirations of its, incredibly young population.
Wow. That sounds like an absolutely immense task.
It is. It's huge. And to meet that kind of scale, you really need growth that is, well, capital intensive in the right way. Growth driven by significant private sector investment, particularly in manufacturing and other sectors that tend to create lots of jobs. It's not just about the headline growth rate. It's really about the composition of that growth and who it includes.
Right. The type of growth matters immensely for jobs. On a more positive note regarding people, though, there has been some notable progress on poverty reduction, hasn't there?
Yes, absolutely. We've seen really significant strides there. The World Bank, for instance, has highlighted tremendous progress. They've noted the near eradication of extreme poverty, based on their definition, and also a substantial movement of people out of what they call lower middle income poverty.
Yeah.
Millions have definitely been lifted out of very difficult circumstances, especially in rural areas.
And government welfare programs, have they played a role in that?
They certainly have, yeah. They've provided essential safety nets through things like food distribution programs, income support, especially during tough times like the pandemic.
Sure.
But I think the expert consensus is pretty clear. For poverty reduction to be truly sustainable in the long run, it needs to be underpinned by broad-based economic growth. Growth that generates those jobs we talked about.
Yeah.
And alongside that, you need fundamental improvements in things like education and healthcare access. Transfers help, but sustainable uplift comes from jobs and capability. It really comes back to that job creation challenge.
Okay. So looking ahead now, what are the major external risks that India still needs to navigate carefully? We mentioned potential tariffs earlier.
Yeah, those potential U.S. tariffs, they remain a significant concern. Some economists have tried to model the impact. Their estimates suggest these tariffs could shade anywhere from, say, 30 to 90 basis points off India's FY26 GDP growth.
So 0.3% to 0.9% potentially knocked off growth.
Potentially, yeah. And certain industries might be particularly exposed. Think gems and jewelry, maybe medical devices, textiles. We've already seen major forecasters, like Moody's, explicitly mentioning this risk when they adjust their outlooks.
Okay, that's definitely one to watch. And China's economic situation, that presents its own kind of challenge.
It does, in a different way. China has this enormous industrial capacity. So there's a potential risk if their domestic demand stays weak that you could see excess Chinese goods flooding regional and global markets. And that could make it harder for Indian manufacturers to compete, both, in their home market and when they're trying to export internationally. It increases competitive pressure.
Right. So there are definitely some headwinds out there. But India also has significant buffers, right? Strengths it can leverage to navigate these.
Absolutely. That strong services export performance we keep mentioning, that provides a really crucial cushion, a source of foreign exchange and growth. There's also a massive push happening into renewable energy with really ambitious targets. If achieved, that could transform the energy landscape and reduce import dependency.
Hmm.
And you've got one of the world's most vibrant startup ecosystems. It's constantly creating thousands of new businesses, including a really significant number of unicorns, those private companies valued over $1 billion.
Like unicorns, yeah.
And finally, the country's foreign exchange reserves, they remain pretty healthy. That offers a good buffer against external financial shocks or currency volatility.
Okay, so there are strengths to draw on.
Yeah,
And all of this, the growth, the challenges, the strengths, it feeds into India's very ambitious long-term goal, becoming Viksit Bharat, a developed nation, by 2047. What do these current numbers tell us about that journey?
well, achieving Viksit Bharat by 2047, that's an enormous undertaking. It really requires not just steady growth, but sustained, high-octane growth. Most analyses suggest you need growth somewhere in the ballpark of 8% annually, year after year, consistently, for decades.
8% a year consistently.
Yeah. So while this 6.5% we saw in FY25 is resilient, it's respectable, especially in the current global climate.
Mm.
It's not yet that level of acceleration needed to hit that very ambitious long-term target within the 2047 timeframe. There's a gap there.
So if 8% is the kind of cruising speed needed for Viksit Bharats, what does the analysis of these recent numbers tell us needs to happen? What could potentially shift the economy into that higher gear?
It really boils down to a few key things, I think. First, boosting investment significantly, really increasing the national investment rate quite substantially. Second, continuing that strong focus on infrastructure development.
Yeah.
That central capex we discussed is key, but probably needs broadening. And third, absolutely supercharging manufacturing and goods exports to capture that larger global share we talked about. Now, doing all of that requires navigating not just those global uncertainties, but also smoothing out domestic factors, things like streamlining regulations, improving the ease of doing business further, ensuring policy consistency to really attract and retain both domestic and foreign capital. It's a complex puzzle.
It definitely sounds like it. So to sort of bring this deep dive toward a close then, the core message from these latest numbers seems to be one of, well, steady, resilient growth for India, which, as you said, is a genuine achievement given the global backdrop.
Exactly. That's the main takeaway. The economy is being powered along by those reliable engines. Consumption, the agriculture rebound, services, and pretty strong export performance overall. But hitting that higher growth trajectory, the kind needed for Viksit Bharat, and critically, ensuring that growth translates into widespread prosperity and jobs. That means accelerating in areas like manufacturing and investment, and it means carefully navigating those external storms.
Yeah, the path forward really seems to be about tackling that huge challenge of creating millions upon millions of jobs every year while continuing to build those domestic strengths and wisely handling the risks coming from outside.
Precisely. And maybe for you, the listener, the really interesting question to kind of sit with after this is, how did this story of steady, dependable growth, which is good, but maybe not yet explosive, how does that connect with India's incredibly ambitious vision for 2047? What shifts, maybe big ones, maybe small ones, both domestically and internationally, might be the key catalyst needed to truly unlock that next level of potential, to ensure the benefits of growth really do reach every corner of the country?
A lot to consider there. Thank you for taking this deep dive with us today.